my name is Joseph Badenhoff, Assistant Vice President and Store Manager of TD Bank in Acton, and it is my pleasure to welcome you to the first episode of Insider's Guide to Banking. Our goal is each month to bring you financial experts in to provide insightful and educational information related to various topics in banking and finance. Our goal over the next few months is to discuss topics such as mortgage loans, the loan process, online banking, and banking fraud, as well as many more subjects to come. At the end of this episode, we're going to provide an email address where viewers can send in their questions to provide discussion topics for us to provide answers as we go on in future episodes. And now I'd like to introduce our guest this month, which is Nancy Dinkle, Assistant Vice President and Branch Manager of Northern Bank and Trust located here in Acton. Thanks for being with us, A.
Thank you, Joe. I'm glad to be here.
So today we're going to discuss how you use your checking account. But first, Nancy, let me ask, how long have you been in banking?
I've been in banking 10 years.
That's a good amount of time.
Yes.
So when we think about banking and more specifically about checking accounts, you know, the word check is in checking account. So let's start there. Can you define for me what a check is?
Sure. A check is a legal document that orders a bank or financial institution to pay a certain amount of money that's designated on the check to a particular person or business or whatever that's also designated on the check. The person who writes the check has a bank account, a checking account with that bank, and that's where their money is held. They fill in the various information on the check, sign it because it is a legal document, and then that bank will ultimately pay that amount of money to the payee.
Excellent. So when we talk about a check, there's a lot of components that go on that are involved in a check, and some are more important than others. Just to start with a good base of knowledge, can you talk about the various sections of a check?
Sure. In the top left-hand corner is the name, the title on the account. It might be individuals, it might be a business. Oftentimes there's an address and maybe even a phone number. To the right, there would be the date. That date is important. If it's more than 6 months old, it's what we in the banking industry call stale dated, and we really shouldn't be cashing or handling, processing any of those kinds of checks. Similarly, if it's post-dated, if it's dated after today, we shouldn't be processing those checks either. Oftentimes they can get through somehow, and so people complain like, I told the electrician not to process that check that early, and so you can't really trust that either. Up in the top right-hand corner is the check number, and that kind of helps differentiate one check from another, particularly if you have the same amount written to the same person time and time again. The next big line is pay to the order of, and that's where the writer of the check fills in the payee. And again, that could be an individual, a business, a trust, an estate, whatever. To the right of that is a box, and in there goes the numeric numbers of the amount of the check is for. The next line is also for the dollar amount that the check is for, but this is where it's written out in words. This is what we in the banking industry call the legal line, and this is what we actually go by. So if the numbers are $50 and what's written out is $500, we will pay $500. So people really need to be careful that they're filling in what they really mean the check to be for. Somewhere on the check will be the logo or the name of the bank that it's drawn on. That might be near the top, it may be in the next section down. In the bottom left-hand corner is a memo line. This isn't critical to the value of the check. It's strictly for informational purposes for the person writing the check. This is for loan payment number 2. This is for happy birthday, whatever they want to fill in to kind of remind themselves why they wrote the check. On the right-hand side is very important. This is where the writer of the check actually signs it. And again, because it's a legal document, it's very important that it gets signed. Below all that is what they call the MICR line. This is a magnetic ink, and this is very important for processing these checks. Down there will be the routing number. The routing number is what identifies each specific bank in the U.S. We have 9-digit numbers in this country. Next to that would be the specific account number that money is drawn on. And then oftentimes the check number is also duplicated and down there also again.
And to talk about the legal line very quickly, one of the most common things you see on checks is people, they finish writing the numbers and they put a long line. Can you talk about why it's important to put that line in on the legal line of the check?
Well, sometimes people might put in just the word 50, and if they don't put in a line, somebody could come in and put 1,000. And 50,000 is much different than 50. So you do kind of want to kill the rest of that line, that space, with something so that people can't just write in something additional.
So what can you do with a check?
A check you can present to a bank for either cash or to deposit it into your own account. Either way, you need to endorse the back of it. If the check is drawn on that bank where you're standing, the bank feels very comfortable because they can easily look in that account and see that the money's there, take the money out and either give it to you or put it into your own account. If the check is drawn on a different bank, the bank isn't as comfortable. They're not that assured that the money is going to be there. And so as a result, they might put a hold on your account for a couple days, a couple business days, just to give them a little bit more assurance that they're not going to be losing that money.
And you talked about, so we covered all the pieces on the front of a check, but you mentioned the endorsement, which goes on the back. How important is the endorsement, and can you kind of describe the endorsement portion of a check?
Sure. The endorsement is, for one factor, it's a way of telling the bank what you want them to do with it. Frequently, people will write on there for deposit only, and then they'll put their check number or account number on there. And that's a nice, pretty secure way, because that means if anybody else along the way picks up that check, that's really the only thing that can happen to that check. They might sign their name as the payee if they want to cash it. Sometimes you could have a third-party check.
Can you talk about those?
Yeah, that gets a little hairy. That would be like if the check is made out to one individual and they want to turn it over to somebody else. So they would endorse it on the back. They would put pay to the order of John Smith and then sign their name. And then John Smith can take the check and endorse it and cash it themselves. Banks don't like those, so probably the most John Smith would be able to do would be to deposit it. Banks always kind of want to do the right thing, and you can't, as a banker, you can't verify the original signature. So you don't know if John Smith stole the check or not. So there's a lot of uncomfortableness there.
So when we talk about that, there's a situation with which the bank would want to force someone to deposit it. Can you talk about what would be required for someone to be able to cash a check?
That's a third party?
No, just in general.
Well, if they're not known at the bank, they would have to show ID. We don't just cash checks for anybody. We want to make sure we're doing the right thing. So they would have to present some form of ID to make sure that, to confirm that they are the payee.
So whenever you're going through a check being processed and gone through, can you talk about a very common term out there is a check bouncing? Can you talk about what that is?
Sure. Bouncing also comes, in the past it was called a rubber check. That means that after the check has gone through all the processing, only to find out that the money's not available in that account. And so the original bank that paid out the money is out that money.
What are the ramifications for a customer if they were to experience a bounce check?
They would probably be assessed a fee from their bank because of the extra processing and irritation that the bank had to go through.
So we've mentioned about the process that a check goes through. So it went through a process and was either paid or it bounced. Can you actually talk about what process a check actually goes through, like the day in a life of a check?
The check starts with the bank that has it. In today's electronic age, they make an image of it. send that to an intermediary bank, which is typically the Federal Reserve. The Fed then sends a pay request on to the bank that the check is drawn on. That bank kind of reviews it. Is the money here? It's not here. What's the reason? I can't pay it. Typically, they'll acknowledge the payment, so the Federal Reserve will debit that account and then send the funds on to the bank that originally had the check.
No, we think about all the different steps that have to go into a check being cleared. I mean, this is kind of the reason why banks take the steps to provide security that not only will they be covered, but the customer will be as well, correct?
Yes.
So we talk about a check that's drawn on us and a foreign check. Can you kind of talk about what those two terms mean?
Sure. A check on us means that it's drawn on our bank, and so we call it an on us check. Banks kind of like those kinds of checks because it's very easy for us to look into that account and see that the money's there, so we're very comfortable with handling those. A foreign check is a term that we use in banking. It just means that it's drawn on somebody else's check, on somebody else's bank. So those we're not as comfortable with, those because of the insecurity or the lack of knowledge as to whether the money's actually going to be there.
And then in the banking industry, I mean, every industry has its jargon. So we call another U.S. bank a foreign check.
Right.
But there actually are international banks that have true foreign nations checks.
Yep.
Can you kind of talk about what's different about those checks being presented and processed versus a U.S. to U.S. bank to bank processing?
Sure. Well, a U.S. to U.S. bank processing might take 2 to 3 days, tops. But a foreign check has to be probably physically mailed to another country, and then there might be currency exchange. It could take 3 to 4 weeks for that to actually end up getting credited to your account.
I mean, and that's quite a long time, and it's very different what people would expect when they're handed a check, even though it's foreign. What would be a better solution if you're operating your checking account if you needed to receive money internationally?
A wire. Yeah.
So, can you kind of briefly talk about what a wire transfer would be, just to segment so people kind of understand what we're talking about?
Wires are a way of sending kind of more direct cash from bank to bank, and so those can go either domestically within the U.S. or from a foreign bank to a U.S. bank or the other way around. And the wiring process also handles the currency exchange. There's a fee for that, for the wires, but there's also a fee for processing a foreign check. So
it goes either way.
Yeah, and it's much faster to do the wire.
One of the questions that comes up is that, okay, if it's on us, which means the drawee, the drawer, and the payee are the same bank users, you know, one of the questions that comes up is why aren't banks sharing information directly? Can you kind of talk about that?
Oh, sure. Back in 1978, the Feds passed or Congress passed a Right to Financial Privacy Act, and this was to protect the consumers from just anybody asking questions and finding out about your financial situation. I mean, at that time, your neighbor could come into a bank and say, hey, how much does Joe have in his accounts? And maybe your employer could do that, or if you're in business for yourself, your employees could do that, family members, and that's just not the way we want to operate in the United States. We want people to feel more secure in their financial situation.
And as we think about, you know, the privacy, every bank now has a well-defined privacy policy in terms of how we can interact with customers' information. Can you kind of talk about, you know, the situations that arise when, and it's generally a family member, you know, who's trying to solve an information request, but we're still protecting the account holder's privacy. Can you kind of discuss that a little bit so people kind of understand why it's in place?
Well, again, it's to protect the privacy of our customers. They have the right for that privacy. So even if a family member comes in, we ask questions to determine if they're on the account or not. And if they're not, then we really can't share any information. And sometimes it's a shame because maybe our customer, the owner of the account, has gone through some health problems and really can no longer take care of themselves financially and make those kinds of decisions. But if this other individual family member is not on the account, we still can't share.
Yeah, we really are controlled by whoever the assigners are on the account, and only people
Exactly.
privilege that information. So we talked about, kind of the regular everyday checks that exist in the world moving between persons and businesses, but there are other types out there. And the first one that generally comes to mind is what an official check is. Can you kind of define that?
An official check is also frequently called a treasurer's check. And this is where the bank will take the money from a personal account for the customer who's requesting the check and put that money into an account that's owned by the bank. And then the official check is drawn on that account instead of the customer's account. And this is a way that makes the payee a little bit more comfortable that this is a good check because the bank is backing it. So it's a check drawn on the bank's account and not the personal account.
And there's a lot of security that comes with those. Another commonly bank-issued item is a money order. Can you discuss what that is and then the differences?
Sure. A money order, it's very much the same as an official check. Again, the money comes out of the personal account and goes into an account owned by the bank. But it's for a smaller dollar amount. I think the limit's like $1,000. Also, with an official check, an official of the bank needs to sign that, whereas with a money order, the customer can sign that. They can also write in the payee. So it's a little bit more like a regular check.
Because on a treasurer's check or an official check, the bank is printing all of the information, and then it's a bank employee who signs.
Yes.
So another form of check that exists out there is a temp check, or some banks call them starter checks. Can you talk about what those are?
When a person opens an account, the checks aren't available right away. They have to order those. So there's a way frequently for tellers to be able to print some checks just to kind of hold you over in a temporary status to get you started, hence the names. And so they'll print just a few of those for you to help you until the couple weeks while you're waiting for the regular checks to come in.
Just kind of bridge the gap.
Right.
So a misconception is most people believe that banks print checks. Can you kind of talk about who actually does print checks for the banks and kind of why those companies are what's used?
There's a select number of companies that are authorized to print checks. It's a whole printing business, so I mean banks don't do it themselves. It's just a whole nother kind of industry, and equipment and just personnel and expertise that needs to be in place to do that. So that's why there's other companies that do that.
And when we think about printing checks, there's a lot of options that goes into it. Businesses especially have there's a number of options, and there's checks that can come out of a printer, and that's, it's a good reason to kind of work with any of your customers to kind of think about what do they need on their checks, especially when it comes to a business.
Well, so with the number of checks that we've been talking about, it's kind of interesting that the number of checks that's been used over the last few years has drastically dropped. In 2009 to 2012, they've dropped by almost 25%. And this is due in large part to the popularity of debit cards. So can you talk a little bit about what a debit card is?
A debit card is a monetary instrument that allows you to electronically make purchases from your checking account using one of the credit and debit card processors, so Visa and MasterCard. So if any of you were to pull out if you have a debit card, pull out your wallet and look at it, in the lower right hand corner there's going to be a Visa logo or a MasterCard logo. They carry the majority of debit cards issued in the United States. And effectively you're using their network to make transactions. The benefit of the debit card is that effectively when you swipe it, you're making a purchase directly out of your account. So the vendor who you're making a purchase from, they're having the assurance that they're being paid as their machine tells them that it's good. And it's it's all run on Visa and MasterCard, but it's coming right from your checking account, just as if you were to hand them a check. It's just more instantaneous for them.
Can a debit card also be used at an ATM?
Yes, it can. So a debit card is really the kind of the electronic access card for your account. So not only can you use it to go make purchases, you can also use it as an ATM card. So whether you're just going to an ATM to check a balance or you're doing withdrawal, it has all of those functions built into itself.
That's pretty handy. So can you talk about, I hear that there's a credit option available with the debit card. Can you talk a little bit about that?
So when it comes to debit cards, since they're effectively using the credit card networks, so Visa, MasterCard, American Express, Discover, and a few select others, they all have networks with which allow purchases to get made. Debit cards use the same networks. So when you go up to your local grocery store and they ask you is it credit or debit, it's because the machine is programmed to take both. When you select debit and you swipe your debit card, it's generally going to ask you to enter your PIN. And there's a flat fee that the vendor gets charged to take your debit card. When you select credit, generally it's not going to ask you for a PIN because the machine is going to read it like it would any credit card. It's just going to ask the Visa or MasterCard, do they have the money? They'll say yes or no, and it's very quick and in real time. And generally speaking, you only have to sign if it's over a certain dollar amount. So to the individual consumer, the holder of the debit card, there's really no difference to them. The difference comes to the vendor in terms of what fees are they paying on the transaction and kind of how it all gets processed. But for the individual consumer, there's no effect to them. It's just however they use it. I do recommend that people select debit so that way you're entering in your PIN, it's a little bit safer. That way you know it's being entered in exactly what it is.
So a debit card really is different than a credit card?
Yes.
Okay, all right. So why have debit cards become so popular?
Well, I think for the foremost reason is that there's ease of use. I mean, up through 2012, in 2012, $1.5 billion was spent via debit cards, and that accounted for over 40 billion transactions. So, and that's all U.S. statistics. It's ease of use, and it's ease for both people. The vendor themselves, as we talked about, there's a little bit of worry in a check being cleared, and that you're going to get that money. Whereas when you take a debit card, you're going to be paid then. And you might lose a little bit of your profit in paying the fee for it, but it's risk versus reward. You're going to get paid immediately. For consumers, it's offered them a more secure way to make transactions without carrying cash. And it's effectively one card. You have access to the funds that are sitting in your account, and it is really, through the advancement, debit cards have been around since the 1970s, but in the 90s they just exploded. And every year more and more transactions fall to be used via debit cards. And it just comes from ease of use, and more people are becoming comfortable with them.
How are consumers protected? There's been some compromises lately. How can I feel comfortable using a debit card?
And that's a great question, because as you look at what has happened, Target, Home Depot, there are risks, and there are plenty of organizations and individuals out there who are looking to make the quick buck, and they're using it via technology. So, when you use your debit or even credit cards out in the world, kind of knowing where you use them and monitoring your account is very important. But to your question about consumer protections, the Dodd-Frank Act of 2009 actually put in place a lot of very important and powerful consumer protections when it comes to debit cards themselves. And in my opinion, debit cards offer you the greatest amount of financial protection of any product that a bank is offering, because it is very strictly defined that if fraud takes place and you report it to your bank, There's a very specialized report that's not that long called the Reg E that gets completed, and that goes to the bank's security division researches it, and they have a requirement within 10 days to either credit your account or complete the investigation in your favor or come up with a very defined reason about why this wasn't fraud. But that type of process, and it's there, and I can talk to my own history. I've seen the majority of Reg E claims, customers get their money back.
Right.
There's a lot of cues that the security departments of banks have. They're trained. They know exactly how to look at a situation and return it. But if someone steals your checks, it's a very complicated process, especially if they stole 50 checks. You're going through a process to protect from 50 checks, and a check can still technically get through. Whereas if it's a debit card, if it's compromised, we close the debit card and a new one can get issued to you. And that card number to you is no longer active, which means they can no longer use it.
So that works the same way if I were to lose my debit card, you have a way of...
Correct. I mean, if you lose a debit card, every bank has a process in place to replace a debit card. And it's whether or not they print them on site, or they give you a temporary, they mail you one. There is a process. You make the bank aware, they'll shut it down, and they'll get you a replacement so you can go back to resuming your normal banking functions. Thanks for being with us today, Nancy.
Well, thank you.
I want to thank everyone for watching, and be sure to catch us on the next episode of the Insider's Guide to Banking.